Alright, we've seen this chart before, a similar type of chart. I actually made my own chart last time around in one of my videos a few weeks back. But now here's a chart off of tradingview.com. And what I said earlier in a video is how central banks don't like to see a stronger currency. And if you look at the US dollar here, in 2009, March 2009, the dollar topped out at 89-ish, okay? And then a little before that, in 2008, the dollar hit around 88-ish. If you go to 2010, you see another top around 88.57. And the dollar has been fluctuating for the past 4 years until recently, where it's been on a appreciation, or you've seen an appreciation of the dollar, and we've seen it gone above the 88 handle. This is quite interesting. For the past 6 years or so, under quantitative easing, the dollar hasn't gone above 90. And one of my videos was that one of the scenarios that could happen is that central banks or the Federal Reserve is going to say no mas. We don't want to see a higher currency or a higher dollar index, because what's going to end up happening is all these multinational firms are going to be throwing a fit. Under this new way of economics, the modern way of economics, these multinational firms don't like a stronger dollar. Why? Because it hurts their exports, and then they obviously don't make as much money. So they want a weaker currency. Even though I want a weaker I want a strong dollar, but a lot of items need to change in the economy, or a lot of aspects of our economy need to change. We need to get rid of all these rules and regulations, cut taxes, have a sane monetary policy. The list goes on and on and on. But we don't live under that right now. We live under this fascist system. But putting that aside, if you want to look at the dollar here, right? Like 88-ish, right? So now the question remains, we've hit close to the 89.90 level. Does this mean that the Federal Reserve is going to engage in some sort of swaps with these other central banks to ensure that the dollar doesn't get stronger? I mean, on one end, the yen, it looks like the Japanese central bank will continue to rape their middle class by having a weaker currency. So that does make the dollar stronger against the yen. But what about the euro? Is the euro going to appreciate against the dollar? Remember, the euro consists of around 57% of the dollar index. The dollar index is a basket of fiat-based currencies. That we should all look into. But anyways, I'm just looking at this chart. Past 6 years really hasn't gone above 89.90. And it almost got to the 89 level. So I'm just thinking, are all these individuals on the wrong side of the trade right now? And let's go to CNBC.com. Dollar bandwagon starting to get a little crowded. So it goes on by saying, no question, the US dollar is the trade du jour. And let's go further down into the article. And then it has individuals saying that, hey, we believe that the dollar is going to get stronger, and here's the reasons why. But this is what I find interesting in this article. All this extreme bullish sentiment can be a red flag. The danger with consensus calls and crowded trades. Any news or data release that pokes holes in the strong dollar story has the potential to cause a massive rush for the exits and could get messy. Once confidence is shaken, it could lead to a sharp snapback as the trade unwinds. So this is what's going on in my mind right now. So I'm not telling you what you guys should do. That's your own choice, or your broker's choice. But anyways, what I'm thinking is this trade is getting too crowded, and we have other developments going on, not in the forex markets, but if you just want to look at what's going on when it comes to the gold market, it's quite interesting. Let's shift now to the gold market. Alright, this article on Zero Hedge, it's now catching some mainstream attention, the story, but it's the Swiss Gold Initiative. As you can see over here, just explains what's going on with the Swiss reserve since the 1970s. The end of Bretton Woods goes down. Let's read the last paragraph here. Conclusion. With the SNB now in full media mode, arguing against a 20% gold holding in the reserves, perhaps some of the Swiss media might care to interview Dr. Roth, who can now be found sitting on the boards of Nestle, Swiss Re, and Swatch. Given that the 1,300 tons of gold sales appear to have been pre-planned by the SNB from approximately the mid-1990s, and given that the Gold Initiative referendum is about to be put to a public vote in just 16 days, it would be valuable at this juncture to now pose some questions to former Swiss National Bank executives in an effort to understand exactly what went on with the gold sales plans and negotiations during the late 1990s. This is a really interesting story, and in the alternative media, this is given a lot of airtime. But what hasn't been given a lot of airtime, which I find quite interesting, right? When it comes to ISIL/ISIS announces plan to mint own currency, and it happens to be gold. All right. The ISIL Takfiri terrorist group says it's planning to create its own currency and coins, promoting speculations on whether the move is viable. The terrorist group said in a statement on Thursday that the currency will be in the form of 2 gold, 3 silver, and 2 copper coins. The Takfiri group said that the motive behind the move was to avoid the tyranny of the international monetary and financial system, adding that the currency will make it possible to avoid the global economic system that is based on satanic usury. And then, long story short, this is a real interesting story. First of all, ISIL/ISIS, right? They kept on talking about this group a few months ago. And in the mainstream media saying that this group's evil, this and that. And my take is, I don't want to get involved in the Mideast or anywhere around the world. I'm an isolationist. But at the same time, it's quite interesting that the United States is going after this group, and this group is now wanting to create its own gold-backed currency. Now, you want to flash back to, what's his name, Gaddafi? So look at this article from RT, Saving the World Economy from Gaddafi. Some believe it is about protecting civilians, others say it is about oil, but some are convinced intervention in Libya is all about Gaddafi's plan to introduce the gold dinar, a single African currency made from gold, a true sharing of wealth. And then it goes on. Gaddafi did not give up. In the months leading up to military intervention, he called on African and Muslim nations to join together to create this new currencies that would rival the dollar and euro. They would sell oil and other resources around the world only for gold dinars. It is an idea that would shift the economic balance of the world. So, a lot of people, including myself, believe that the Gaddafi intervention was for, number one, Gaddafi coming up with this gold-backed dinar. I mean, they had many chances to go after Gaddafi, and then all of a sudden they wanted to kill him in 2011. I mean, put the picture together, or put the puzzle together, and you could find the answer. And then you want to look at Saddam Hussein. Alright, so I'm now at LouRockwell.com. This is a speech by Ron Paul, and let's just look at this one category, or this one part of his speech, where it's really quite interesting. Alright, here we are. In November 2000, Saddam Hussein demanded euros for his oil. His arrogance was a threat to the dollar. His lack of any military might was never a threat. At the first cabinet meeting with the new administration in 2001, as reported by Treasury Secretary Paul O'Neill, the major topic was how we would get rid of Saddam Hussein. Though there was no evidence whatsoever he posed a threat to us, the deep concern for Saddam Hussein surprised and shocked O'Neill. It is now common knowledge that the immediate reaction of the administration after 9/11 revolved around how they would connect Saddam Hussein to the attacks to justify an invasion overthrow of his government. Even with no evidence of any connection to 9/11 or evidence of mass weapons of mass destruction, public and congressional support was generated through distortions and flat-out misrepresentation of the facts to justify overthrowing Saddam Hussein. There was no public talk of removing Saddam Hussein because of his attack on the integrity of the dollar as a reserve currency by selling oil in euros. Many believe this was the real reason for our obsession with Iraq. I doubt it was the only reason, but it may well have played a significant role in our motivation to wage war. Within a very short period after the military victory, all Iraqi oil sales were carried out in US dollars. The euro was abandoned. So there you go. I mean, I'm not saying that when it comes to Saddam Hussein and Gaddafi that they were only getting rid of because of the move away from the petrodollar system. There were more factors as well, but gut feeling tells me that the main reason why we went after these fellas had to deal with the petrodollar. So going back to ISIS, right? They want to mint their own currency. That's really interesting, okay? The group that the United States frowns upon, and they were talking about this a few months ago, but the mainstream media is not talking about how they want to mint their own currency. And then now going back to the dollar, right? Dollar is really, really strong right now. So not really strong, but comparatively speaking for the past 6 years. Suppose it goes down, and now we have the gold Swiss initiative, right? Who knows, with the rehypothecation and whatnot, central bank starts to buy gold again. And then secondly, you have ISIL/ISIS minting their own currency. Some geopolitical event happens. I mean, what if something goes down the tubes now? I mean, we all know that the petrodollar system is still intact for now, but it's on the verge of crumbling. But the United States has made sure that it will not crumble. But we shall see what geopolitical event will happen if it does. Because if you're looking at the war cycle, Martin Armstrong, who covers this, says that the war cycle is intact and that we should expect something soon, really quickly. Well, I'm not saying where to invest once again. I'm just looking at markets from an unbiased perspective. Even though I do feel that down the road, the dollar will go down. And also other fiat currencies will go down as well. And then what we're probably going to see is higher equity prices down the road, higher gold prices down the road, and then obviously a lower standard of living. Now this could take years to unfold, but once again, I'm just looking at it as of this moment. As of this moment, I feel that too many people are in the dollar right now. We have a potential geopolitical event to occur with ISIS/ISIL. Gold initiative, quite interesting. Last time I remember where we had central banks buy up this much amount of gold was India, right? They bought a huge chunk of gold in 2010, I believe, and the gold price rallied $300. And then, yeah, you had a correction. But we shall see, guys. Let me know your thoughts. Thanks, and I'll talk to you again. Bye.